Good morning, everyone. It's great to be here today. Thank you for the invitation. My name is Yon Cholpan. I am the head of business and advanced analytics at Avant Money, part of the Bank Inter group. Uh, the My expertise spans over a lot of different areas, but mainly consumer finance, big data, and business analytics. And at Avant, our team focuses basically on turning data into better decisions. That would be our main mantra at Avant. So starting into the presentation, as of today, every financial institution already captures location data. It sits in application forms, in different data sets and databases, and it's mainly used to satisfy regulatory needs. But very few organizations today actually use location to make better decisions. And for a long time, we didn't either. We treated address as an identifier, basically, not as intelligence. And the shift we began making was simple, was to not ask ourselves where does this customer live, but what does where they live help us understand. Today, I want to share that shift and how that shift moved geodata at Avant Money from an operational necessity to enterprise decision and capability. Okay, I'll move quickly through the context first, who we are and how analytics operates within Avant Money, and then we'll look at why geography matters in lending in the first place. From there, I'll focus on where geointelligence actually changes outcome with two use cases around acquisition and customer growth. And finally, I'll touch on how we see location intelligence evolving as part of the next generation banking. Because before discussing data, it helps understand the environment we Avant Money operate in. And today, we operate in a very highly competitive, digitally led lending market in Ireland. And digital lending changes the rules slightly. So customer expectations are now becoming immediate. We know that competition is intense in this space, but we also need to maintain very disciplined margins. So in our case, efficiency isn't an option, it becomes something structural. So growth needs to be precise and risk needs to remain controlled. And also, importantly, the capital deployment needs to be intelligent, which means that in our case, data stops being something you analyze afterwards and becomes something that actively shapes decisions. And at Avant, our function is exactly that. Analytics doesn't sit on the side producing reports. It sits in acquisition discussions, in credit decision forums. It sits inside portfolio steering conversations. So we don't observe decisions, we actually shape them. And our mandate, as I told you before, is relatively straightforward. We need to use, turn, and operationalize those data assets into commercial advantages, both for us and for our customers. And obviously, that led us to naturally ask ourselves, where does location intelligence fit into all of this? So let's start with the foundation. Why does geography matter to us at all? What we know from our expertise is that the demand isn't evenly distributed, affordability isn't evenly distributed, and financial needs certainly aren't either. Yet historically, all the big banks and the lending analytics focused almost entirely on individual customer on the individual customer insights. So we looked at things as like income, credit history, affordability ratios. All of them are essential still today, but they are incomplete. because customers don't operate in isolation. Uh, they operate within environments, and geointelligence introduces that missing context. And at the time when we started looking at this, one insight became clear very quickly. And to my point earlier, demand isn't local, even when the strategy is national. And that realization changes how you think about acquisition, how you think about engagement, and how you think about growth. The next challenge became an operational one. Insight alone doesn't change outcomes. So the question becomes, how do you or us embed geography into the decision workflows? At Avant, GeoDirectory sits as an enrichment layer alongside the internal and the WO data. It feeds acquisition models, it supports lifecycle analytics, and informs the downstream decisioning. And the key idea is simple. Geo only creates value when it sits inside decisions and not dashboards. The first place we saw a tangible impact was acquisition. Historically, acquisition strategies were largely national, so campaigns were deployed broadly and investment was distributed evenly. But what we found out was that the response behavior wasn't national. It was hyperlocal and focused on different areas. So some areas consistently engaged, while others simply absorbed spend with very limited intent for products. So we were allocating the capital and the spend distribution uniformly across the nation, but into a non-uniform demand. And again, that raised an obvious question. What happens when demand is local but investment isn't? What happens when you deploy all your resources evenly across the country, but you know that demand isn't focused that way? So what we did was change the optimization question. Instead of asking which channel performs best, we moved on to where does this channel perform best. And the geo propensity insights began informing campaign allocation and prioritization over spend. And most importantly, we managed to do all of this without changing the strategy. Our products didn't change, the channels didn't change, only the context we operated within changed. So we managed to improve precision without increasing complexity. And once precision improves, scale becomes naturally the next challenge. We analyze characteristics shared by high-performing geographic clusters, and then we expanded targeting into statistically similar environments. So we knew what our original customers looked like and the environment they operated within, and we expanded that lookalike model across the country. And with that, the geointelligence that we used allowed a national expansion without reintroducing that inefficiency we talked about earlier when deploying capital. Okay, but acquisition is only the entry point, obviously, for us. The real value emerges across the customer life cycle. And one of the biggest challenges we have in banking today is actually timing. We know that our customers' needs, financial needs, evolve continuously, but our products tend to remain static. So the question becomes, how do we engage the customer at the right moment of his life cycle? And the geo-enriched context help us identify these kind of life cycle transitions, things like the household evolution, residential stability, and changing financial priorities. So in our world, that context turns the engagement from promoting products broadly into relevance for specific customers in the different moments of their life cycle. And when that acquisition precision we talked about and lifecycle relevance connect, the impact actually compounds. So acquisition efficiency improves, customer alignment strengthens, and the operational friction also reduces. And something very interesting happens, at least interesting in our world, and that is that growth improves, risk discipline improves as well, and efficiency improves. And all of this happens simultaneously. And traditionally, all of these different factors used to move in different directions. So you manage to improve engagement, but you might increase your risk. You tend to control your risk, but you limit your growth. So with the additional context from GeoDirectory, we managed to move all of them in the right direction. And more importantly, this isn't just an institutional benefit for us. Better contextual understanding reduces the unnecessary friction with our customers, also supports more inclusive affordability interpretation depending on the local environment, and also enables interaction that feel relevant to our customers rather than intrusive. As you know, sometimes we get tired of receiving spam emails, and we try to reduce that as much as we can. And with that, the better context ultimately leads to a better customer experience. Okay, so taking a step back from these individual use cases, geointelligence in banking evolved from address capture to an enterprise decisioning capability. And its value compounds when it's embedded across the life cycle and the context consistently improves the precision in our lending. But with that, the more interesting question, though, is where this goes next. So far, everything I've discussed about reflects the capabilities we have today. GeoIntelligence supporting that part of acquisition, the engagement, and enhancing the decision interpretation. But the more interesting question is this: what happens when that location stops being enrichment and becomes a core part of the analytics capability? So today, geography often sits downstream, so we sometimes analyze it after decisions. We use it to refine targeting and to interpret the outcomes from our different campaigns and customer behaviors. But we're trying to increasingly move those geo signals upstream. So embedded into our modeling frameworks, into predictive analytics, and also into automated decision environments. And that shift matters, and it's very important because once geo becomes native to our function, to analytics, rather than append to it, decisions begin incorporating that customer context automatically. So if geo becomes embedded into analytics itself, the next step is understanding how that decisioning evolves. And for that, we need to first understand what is the context today across the industry, not only at Avant Money. And what we know today is that the geo adoption sits at very different stages in many organizations. So many of them still focus primarily on address validation, the basics of using geointelligence, or ensuring data quality or regulatory compliance. Others have progressed into segmentation, supporting marketing optimization. A smaller group that we're part of integrates geographic insight into risk and lifecycle analytics. And only a few are beginning to actually explore real-time contextual intelligence. What this maturity curve really represents is not geo capability alone. It represents the organizational readiness of the different banks to operationalize this data and actually use it in their decisions. Because geointelligence only delivers value when institutions are ready to act on the contextual insight. So if this maturity continues to evolve, what does the future decision environment actually look like? And one of the most significant shifts in banking today is moving from a product-led thinking toward a customer-led decisioning. So as I told you before, historically, different institutions designed products first and then started searching for customers. And in the environment we're in today, those expectations are actually reversed. Customers expect that us as financial services provider to adapt to their different circumstances. But understanding customers purely through transactional data has its limits, obviously. Income and credit history explain part of the behavior. Context explains the rest. Things like the household structure, stability, local economic conditions. And in this context, geointelligence helps to bridge that gap. So it allows institutions to understand customers not just individually, but within their lived environment and context. And that enables an engagement, we think, that feels timely rather than reactive. So as our function evolves, as analytics evolves, institutions move through these different stages. So we started with descriptive analytics, basically explaining what happened and understanding why it happened. We moved on to predictive analytics, trying to estimate what may happen in the future. And now what we're trying to do is prescriptive analytics, basically recommend what should happen next before we have any insight. So geointelligence only strengthens each stage of this maturity curve because context improves prediction. Regional demand forecasting becomes more accurate. Things like next best action models become more relevant, and the risk interpretation also becomes more stable. And ultimately, all of this leads to decisions become proactive rather than reacting to customer needs. Okay. So up to now, I focus on how geointelligence supports decisions, but the opportunity sits ahead of us. And this slide represents how we see financial decisioning evolving over the coming years. At the foundation, institutions continue bringing together the multiple data sources that are available today, internal data and customer behavior, bureau information, things like CCR, open banking signals, and increasingly, the enriched geographic intelligence. So GeoDirectory plays a critical role here because it allows data to move beyond the individual alone and towards understanding household and environments and financial context and living context. And once that foundation exists, intelligence begins to change as well. We move from a fragmented customer view to that single customer understanding. And that allows us to link the relationship and interactions across all of our different products. And from there, analytics evolves further into household level insights. So recognizing financial needs are rarely individual decisions, but shared within the living environments and life stages of families across the country. And ultimately, the goal is to enable real-time decisioning. Decisions informed not only on historical behavior, but also by those contextual signals and executed instantly at the point of interaction. What this creates is a contextual engine sitting underneath every channel of communication. So whether a customer engages through mobile or through web, contact center, or even direct physical communication, the experience becomes consistent. It becomes informed and adapted to the customer needs. So geointelligence moves from being that enrichment layer at the base to becoming a part of the infrastructure powering financial services. And that's why we believe location intelligence will increasingly become a foundational pillar of decisioning in financial services. Okay, so if I summarize the journey so far, Geo began as operational data. It became analytical enrichment, and is now evolving into decision intelligence. Understanding customers matters, but understanding their environment matters even more. That's the shift we try to instill at Avant Money, the shift from address to advantage. Thank you.